Welcome to the India FinTech Diaries, the only podcast focused exclusively on the Indian FinTech market. I'm Elroy.
And I'm Hemant. In each episode, we dive into the latest trends, ideas, innovations, business models, and personalities that are shaping India's fintech landscape.
We also invite amazing guests who are innovators and industry players that are driving the change that is helping make financial services more modern, innovative, and inclusive in India. Come join us as we explore the changing landscape of FinTech in India.
Hi, everyone, and welcome back to India FinTech Diaries. For those who are listening to us for the first time, I am Hemant and I'm joined by my co host Elroy. Elroy, I know you have been binging on Shark Tank. How is it?
Yes, Eamon, that's actually a pretty good show. I enjoyed it thoroughly. And thanks to Shark Tank, I think startups, entrepreneurship, angel investing have pretty much become part of the dinner table conversations in India. And that's a very welcome change. Now, since the entire country is talking about startup investing and we are coincidentally running WealthTech as a theme on the podcast, we thought it's an excellent opportunity to get someone who's working towards democratizing private market investing. Let's take a step into this wonderful world of startup investing. And to guide us through this journey, we have in the room today with us Karan Mehra, CEO and founder of Tyke, a fintech startup building infrastructure for private investments. Welcome to the show, Karan.
Thank you so much. Thank you, Hemant and Elroy, for having me here. I think you guys are doing a fantastic job with this podcast. I've been an avid listener of all the previous ones, so glad to be here.
Awesome, and thanks for the kind words, Karan. So, Karan, to start with, let's start with the genesis story behind Tyke and what made you build it, and that to an age where I was out partying. I'm sure Elroy was also out partying at this point of time. So, why? What's the genesis behind this?
To know the genesis of Tyke, I think I'll have to sort of throw a light on my background as well. I'm a chartered accountant by profession, and I used to work at Deloitte before I started my journey on Tyke. Now, while I was in Deloitte, I was serving in the Mumbai office in this department called Global Business Taxation. A lot of the tasks that I was doing or I was working on involved structuring, involved tax implications, also involved going through working with the M&A and IB division teams with the entire restructuring process. Now, while I was assisting companies in this process, we came across a certain use case which seemed very interesting to us. The use case was that it was taking approximately, I would say, 1.5 to 2 months between the investors and the founders of companies to close the deal, which means negotiating the valuations, setting the terms, and so on and so forth. Which makes sense to most of us because that's something which is subjective and it does take time, right? But the part which sort of resonated with me or stayed with me was that once the deal was confirmed, it was still taking this long for the funds and the procedure to get completed and hit the company's account, which at a very granular level did not make much sense to me because if you guys have shook hands, if everything has been agreed, what's taking so long, right? And that sort of led me to do my own due diligence and research to figure out that why is this the case? Why is it taking so long for the entire capital fundraise process to get completed if all the terms and everything that's involved is completed? And that sort of led me to build Tyke. The intention of Tyke was that we realized in this journey that the entire process in which capital transactions take place today, especially in the wealth tech division, is something which is completely offline and obsolete. There is absolutely no medium or no method in which these transactions can be automated. Taking you through a simple process, if I were to raise capital for my company, the steps I would follow is I would first coordinate over Gmail and WhatsApp and Zooms with my investors. Once that is completed, we probably sign certain documentations, or these days something that's super common is the safes. After that, I would have to open a new share capital account, which requires tons of documentation and takes up between 15 to 20 days with any bank which I work with. Post that, I would have to hire a trustee for managing the transaction. I would have to hire a couple of lawyers, couple of chartered accountants, couple of company secretaries for managing the entire processes. Then once the account has been created, I would send those details to my investors, maybe domestically or who are sitting abroad. They would add me as a beneficiary, send their KYC information to my lawyers or my financial consultants. If that information has some, I would say, mismatch, they would probably have to solve for that as well. Post that, they would wire the funds in a completely offline manner, because today there's no payment solution which solves for that. Once that
Right.
entire process is done, once the money has hit the account, assuming FDI clears it, which is another challenge which we're trying to solve, that's when finally I have access to the funds, right? Then I will manually issue my share certificates or whatever instrument I'm working on, send it to them, which is digitally signed or signed personally, one by one, by me and my director for all the certificates I've issued. And that's how the process works. So this is typically taking between 2.5 3 months today, which sort of made me realize that this is a bigger problem that we should solve for. And while we were solving for this problem, we realized that maybe automation was the reason that smaller ticket size investors did not get access to this asset class or were not able to understand how to do this. And that led us to build something very interesting as well, which is something we call community rounds now, which
Mhm.
automates and democratizes the concept in which people can invest in startups.
Got it. Got it, Karan. Karan, we have seen quite a surge in the number of angel investments, with even Bollywood actors now jumping into the fray. Though still, startup investing seems to be limited to eligible angel investors, which under the SEBI regulations 2012 for individual investor is defined as individual with net tangible assets of at least INR 20 million, excluding the value of her or his principal residence. And if the angel investor is a body corporate, then it must have a net worth of at least 100 million INR. So regulation clearly seems to be a challenge in the growth of private investors, especially in the startup investment, right? So help us enumerate the key challenges which is ailing the private investment market in India, especially the segment which is related to startup investment.
Absolutely, Hemant. I think what you've said is absolutely true. As of today, our current regulations aren't very favorable when it comes to investing in startups. However, what you sort of underline are the criterias an investor has to follow if he wants to invest in an alternate investment fund,
Got it.
which means that he wants to invest in an SPV.
Hmm.
However, these criteria do not apply if you're investing directly in the company or in a manner where you're dealing directly with the company. The reason these criteria have been put in place is because primarily in an SPV, you're allowing another person to manage your capital. And
Hmm.
because someone else is managing your capital and is pooling that capital and investing it in another name, that's where SEBI requires you to meet these criteria.
Got it. Got it.
So, Karan, clearly Indian investors are facing challenges while investing directly in Indian startups. But what about international investors trying to invest in Indian startups? So, I've actually spoken to a few of them, and they have had a lot of complaints around cumbersome documentation requirements, the way we treat taxation, and a lot of other issues that they face. Can you help us understand some of these challenges for this category as well?
Absolutely, Alro. Actually, while we speak, we've recently developed a very interesting infrastructure layer, which also allows or promotes foreign direct investments in the same manner as we build the domestic stack. So that's
Right.
something very interesting that you mentioned, and that's completely true. Basis some reports and some conversations we've conducted, 9 out of 10 investors who want to invest in India do not end up investing because of these reasons. And that's primarily because today it sort of comes back to how I started the conversation about how the processes today are completely offline. You have to submit various copies, get some compliances done with various banks, and sign tons of documentation work, right? I personally feel if that layer has been automated, it genuinely solves for these problems. At the same time, the biggest challenge most of these companies or individuals face, is that whenever they make an FDI investment, because the 6 pointer KYC that comes from the remitter bank is never satisfactory, the funds often end up going back to them and they have to again send the funds again, which is a very tedious process. And because of that, they might sometimes miss the cutoff date in which the startup
Right.
intends to complete the round. So as you said, Elroy, these challenges are severe, but the only way to solve for them is by partnering with the banks, partnering with the AD bankers who are doing these filings, automating that from the grassroots. At the same time, getting the remitter bank to send these copies in a structured and a predefined manner within 24 hours after the transaction has been completed, which is what we intend to do at Tyke. We've basically partnered with various remitter banks, various third party integrators, and we've set up an automation system for all these FDI filings, which basically allows foreign investors to follow the same flow we're offering domestic investors today, and is trying to solve, the problem where FDI challenges hopefully will not be a very big task now.
I think, Karan, that's some great initiatives they've taken. Let's take a step back for a second and let's try and look at how Tyke is solving all these challenges. And I've often found the best way to help anyone understand how a product works is maybe to take a recent transaction and walk them through the entire user journey. So, can you take a recent transaction on your platform and walk our listeners through the user journey for a startup founder as well as an investor, looking from the point of view of both parties?
Absolutely, I'll do that. Primarily, let's take an example of a recent fundraise
Yeah.
I conducted in my own company, where I had domestic and foreign investors, individuals and corporates. So the way the transaction flows is fairly simple. The founder comes in. The founder, in this case, which was me, we create the deal that we want to list. So let's say the deal is that I'm raising a $5 million check in my seed round.
Right.
It is a price round at a certain valuation with certain terms. Let's say liquidity preference is 1x, and there are no tag along or drag along rights. Right. So once you check mark and tick mark these boxes, our system automatically creates that SHA or that safe for you, which you'll be signing with your investors. Once this is done, you just have to press the invite button, invite your investors via their email IDs, or you can send them the link as well. Once they get this invite, they basically can sign up using this invite on Tyke. Now, once
Okay.
they sign up on Tyke, we basically ask them for their name, which is your first name, last name, email ID, mobile number, your unique identification number. In case of an individual in India, we ask for the PAN number and their DOB. In case of a corporate, we ask you for your GST number or your certificate or your SIN number. And in case of a foreign investor, we ask you for your UIN number, which could either be a passport or it could be
Yeah.
your social security number or the registration number of the company. Now the interesting bit is that our governments and other governments have built some really interesting APIs, which allows you to get the entire KYC information basis certain inputs. So to give you perspective, Elroy and Heyman, I could get your entire KYC data, which could be your name, your father's name, your mother's name, your address, your Aadhaar or your Aadhaar registered address, and also your phone number, just basis me sending a hit to this software called CKYC, which is Central KYC, by just your PAN number and your DOB, right? So we're leveraging technology to get KYC information which you would have to manually send, or you would send a self-attested copy to us, or you would send a bank statement to us, or you would send some phone bills to us, by
Right.
just taking two or three inputs, and that sort of allowed us to make the process of KYC checks pretty much automated, right? So today, instead of asking you for a self-attested copy of so many things, I'm basically getting that data off the government database, which is probably the closest you can get to the roots, right? Post that, so once the KYC has been completed, it's almost automatic. So let's say in Heman's case, Heman's uploaded his PAN number and his DOB. We've got his KYC details. You're basically asked to accept certain risk declarations. That's something we're doing at our end to make sure that you understand that startup investing is something which is not liquid, or which is something for people who aren't risk takers. Once that is done, you basically land on the deal page created by the founder. You can view the terms, you can view the deal terms, you can understand his pitch deck, you can understand the problem solution that he's trying to solve. Post that, all Hemant has to do from here is just click on the invest button. Now, here's the interesting bit. We've actually created a very interesting, I would say, wallet like structure, which serves as a
Okay.
capital gateway. Now, what that does is that basically allows you to transact capital transactions in a completely instant and online manner, which is something which wasn't happening before, because a traditional payment gateway is not built for capital transactions.
Yeah.
A traditional payment gateway works on the concept of nodal accounts, right? Which basically means that once a user transacts, that money sits with the payment gateway's nodal account, and from there it's settled maybe between 1 to 3 days in your settlement account, right? So which
Yeah.
which is something which was a big no-no with respect to capital account transactions, because in capital account transactions, the money always has to flow from the person remitting it to the person who's receiving it. So if I use a payment gateway structure, I'm actually liable to issue the shares to the PG and not to you because I've received the money from the PG, right? So that's a structure which does not make sense in terms of a capital transaction. So what we've done is we basically created a layer of, I would say, virtual accounts and settlement wallets on top of the existing PG integration that are there today, which solves for this problem. Which means that if Hemant is investing completely online using net banking, his debit card, his wallets, or UPI, the money is flowing from Hemant's account to Tyke's account in this case, because Tyke is the person raising capital. So in that manner, Hemant is able to completely transact instantly. I would say in opposition to the existing structure, which is basically commitment and then calling for the money in a completely offline manner after a few days. So that allows Hemant to transact almost instantly.
Right.
Post that, the term sheet or the safe opens up on Hemant's screen, where Hemant can directly come in and electronically sign this system. Primarily, Hemant was able to complete his transaction in under 2 to 3 minutes. That's the flow a complete investment would follow. In case of foreign direct, in case of FDIs, the only additional document we require from your end is you also have to upload your passport photo in the
Hmm.
KYC form. That's about it.
Very interesting, Karan. Karan, you also spoke about T-Safe. Is it different from the standard safe agreement? And if yes, what are the clauses in there which protects the interests of both investor and the founder?
So Hemant, primarily when we started Tyke, our intention was to serve startups of the age between, I would say, 0 to 2,
Hmm.
which
Right.
is between pre-seed to a Series A stage in terms of their fundraising. Now at this stage, because bot seats and all of these anti-dilution rights don't really matter that much,
Hmm.
what we did is we basically took some precedence and some reference from the safe used by Y Combinator in the US, and built a very interesting version of that for India. Because the traditional safe used in the US could not be used in India, because in India you can't invest in contracts and call it securities, right? So it had to be a security of some sort.
Hmm.
So in India, we're using this system which works in the form of compulsory convertible debentures or compulsory convertible preference shares, which basically allows these investments to take place. So a T-Safe, I would say, is a standard India-based safe document that we've created. And till now, over 65 companies has used the T-Safe for their transactions through Tyke and the ones they've done after Tyke.
So, Karan, actually, just before you, we had someone from Grip at our place, which allows alternate investments. And I was having the discussion with my few friends who were interested in that kind of investment. And they kept talking about that sometimes when they invest, they have this worry of liquidity, right? Because sometimes they're parking the funds, and when there is an emergency, they would like to move that fund out. Now, in a standard startup investment, the exit is normally at an M&A or IPO, which may be some time away. So, are you also solving for that liquidity issue as well?
So, Heman, when we built Tyke, our intention was to not take away the attributes of the instrument, right? We wanted it to be a startup investment which has its risks and has its returns. However, that was a very big criteria which played a part. So what we've done, Hemant, which is the part of our T-Safe, is that apart from the standard methods in which you get exits, which is your M&A and IPO, as you rightly said, we've also added an option where after every 6 months of, I would say, holding that investment, Tyke's analytic bot allows you to sell this investment to anybody interested in buying it on the Tyke platform itself. So we're trying to allow and create liquidity in some manner, but it is definitely basis demand and supply.
Interesting. Pretty interesting, Karan. Karan, I had another question there. And anytime you do an investment, right, the immediate next question that often comes is, what's the tax implication of the investment? And I'm sure this would be a key query that you're getting from people using a platform as well. So could you let our listeners know a little bit about the tax implications of investing with Tyke?
Absolutely, Elroy. So today, while we operate using the standard CCD and CCPS route,
Yeah.
what we've done is we've also started a very interesting concept, something we call a CSOP, which is a community stock option plan. So both CCD or a CCPS and a CSOP have different tax implications. Because I've
Right.
spoken about CCDs or CCPS earlier, I'll just probably start off with that. A CCPS or a CCD are securities issued by the company, and they're governed as per the Companies Act, which means that they fall under the same tax implications as equity shares in unlisted markets. They come in the straight concept of that if they're held within a certain period of time, they are termed to be short-term capital gains at the time of exit, and if they're held after a certain point of time, they're termed to be long-term capital gains after a point of time. Standard asset investment structure works on this for unlisted shares, which is capital gains as per section 45 and above.
And what's your view on the change in long-term capital gains that was introduced in the budget? Even after this change, I think the tax burden on domestic startup investors still comes out to be about 24% as compared to someone investing directly in the equity markets, where the equity market investor will end up paying maybe 10 to 12% on long-term capital gains. So, do you think this high tax rate will continue to dissuade individual investors from investing in startups?
To be very honest, Elroy, at least in all the conversations we've had,
Yeah,
we've never seen the capital gains rate to be a standard trigger for dissuasion in investing. It's always if they don't have, I would say, faith in the company, or they don't have faith in the founders, right?
right,
But primarily, it is a welcoming move, although it is not something which is solving the challenges, but it's definitely a welcoming move. However, the rates have to drop further below for it to become more welcoming. But personally, I don't think it's going to dissuade an investor, because I've always discussed this with a lot of people that when anybody is investing in a startup with respect to the stock market, it's much more than just capital, right? It's actually
right.
a journey you're experiencing. We're actually becoming a part of that entire journey. And everybody, even if we're running our own company, or we're employed somewhere, we have the entrepreneurial spirit inside us, right? So it's also a very interesting social journey, apart from just the, I would say, financial bit. And the reason people invest from a financial perspective is that they think that out of the 10 investments they do, couple of them would be such great outliers that could overcome all the other investments, and at the same time also sort of cover all the high tax rates that they would have paid, even if the investment was made in the stock market.
Yeah, that's pretty true, Karan. As far as investing startups go, that's probably the scatter and pray kind of approach that most people end up taking. Karan, thanks for that fantastic deep dive into the platform and the offering. Now let's look at some of the numbers. So what's been the traction that you've been seeing so far on the platform?
Absolutely. So traction currently has been pretty interesting. The way we're running a company right now is that we're launching certain collaboration that we do with companies, something we call community stock option plans on the platform, where investors can start investing as low as 5,000 rupees. Now that's something which has really helped us in acquiring a lot of startups, acquiring a lot of people who are working with us in the entire B2B zone that we're doing, which I will touch upon later. But currently, our traction has been really good. Just this month, we crossed 50,000 investors who have invested on Tyke in a matter of just 4 months. So that's something very interesting. Currently, we're seeing a reinvestment rate of approximately 33%, which means that once you invest in a startup for the first time, there is a one-third chance you're investing again in the next startup that's going live on time. Apart from this, we've crossed over 65 deals in the last 4 months, where we facilitated or powered these transactions. With respect to volumes, in January we approximately touched $20 million of gross transaction value over around 35 deals. So yeah.
Congratulations, Karan. Then in such a short time, 50,000 investors and 65 deals is like a massive number. Now, when we look at those 50,000 and 65, what's the typical investor and startup profile in your platform, and what's the kind of fee that each of those pay to use the platform?
So a typical investor today is looking to invest in alternate investments, and he's sort of allocating, I would say, approximately 20 to 50% of the salary, or the income that he makes in startups. The average age of an investor right now is around 34, and the
Mhm.
average investment made on Type overall has been around 65,000 rupees.
Got it. Got it. And what about the startup profile?
So, with respect to startups, because of us introducing community stock option plans, I think the matureness and the stage of startups have actually increased and gone a little higher. So, currently, the average startup today already has more than 75 lakhs of revenue per month, or they've already raised, I would say, $1 million check before they've come on time. So they've slightly become a little more mature with respect to with us introducing community stock option plans.
Nice. And also wanted to know the fee for each of those parties.
Absolutely. Currently, we're running on a fee where we charge a 2% transaction fee to the investor and to the startup who's raising capital on time.
Got it. Got it. And Karan, I was talking to a lot of founders from the fintech industry, and there seems to be an increasing trend where a B2C or business to consumer fintech, which had built a technology for itself, is now also getting into tech domains. That means once this amazing tech has been built, they're offering as a service to other firms which could benefit from it. So is that on cards for Tyke as well?
Absolutely, Hemant. That's something we're doing as we speak right now, and that's the interesting bit, right? So for us, solving for FDI, solving for ODI, solving for the entire processes at an infra level has allowed us to become a B2B operator as well. So today, we're leveraging our APIs and providing it to a lot of founders who are running their private rounds, which means that they're running rounds where they have, I would say, 10 to 15 investors, a mix of corporates, individuals, domestic plus international. So they all are looking for a solution which automates their entire process and as I said earlier, allows them to solve for documentation, allows them to reduce the timeline from 2.5, 3 months to maybe just a couple of days. So that's something which has sort of picked up quite well for Tyke. At the same time, this API or this infrastructure is also being provided to other angel investment networks, to other accelerators, incubators, and to some extent even venture capital funds today who are using these systems to automate their entire process. Very recently, we also leveraged this API and gave it to some players who are building their own alternate investment platforms in India.
So, Karan, we spoke about few new things which are on the cards. One was that secondary market for liquidity. Second is this technology platform which you are providing to others. What else is in the Tyke Forge right now? It seems to be you are working on multiple items, growing what is already there, building some new things. What else?
So currently, Hemant, I think this is where we're currently our thoughts are just focused on these three elements for now. So our goal or our vision at Tyke is that we always say this is we want to be the Stripe for private investments. What that primarily means is that we want to have complete control over how a capital raise is happening and the dynamics around it, right? So for us, wherever we see any level of synergies with respect to how do we make the process of transaction and reporting easy, that's where we come in. And with respect to reporting, we already have an inbuilt analytical tool which automates MIS reports.
Got it. And Karan, the Indian startup industry seems to be going through its, I think, golden age. What's your view on then the private investment space and how it will shape in the next 2 to 3 years?
Absolutely. I think today every person wants to invest in startups. Everybody wants to be a part of the journey. Everybody wants to give their feedback with respect to how these startups are working. I don't see this changing. I rather think it's going to get much stronger. So as per some reports done by KPMG last year, it's at a CAGR of 25% right now, and I only see that growing over time. So I personally think it's a very good time for companies like Tyke to build their own infrastructure at the same time democratize the process, because I genuinely see alternate investments becoming much more streamlined, much more common, especially with even, as you guys said, Bollywood folks and shows like Shark Tank encouraging investing in startups.
Karan, if someone wanted to know more about Tyke, what's the best way to do that?
So the best way to do that would be to visit our website. It's called www.tikeinvest.com. Over there, we've also done a very interesting bit where I personally feel that, as you guys rightly said, the Indian investment stage in alternate investment is something which is very young. So we've personally built a lot of documentation, a lot of knowledge around this. We also done a few series where we're explaining how the entire processes of investing in startups, and more importantly, how Tyke works in that process. So I think the best way would be to come visit our website, go through the literature and the videos we've created. We also have our own chatbot on the website, which will support all of these all your queries. And at the same time, you can reach out to us at our email support@tykeinvest.com, which will solve for these problems.
Excellent, Karan. We'll include some of these details and links in the show notes. It was truly amazing speaking with you, Karan, and all the very best to you and your team on this journey.
Thank you so much, Hemant and Elroy. It was great to be here, and and I hope you guys continue doing this because of folks like you. I think companies like Tyke and other emerging companies are going to get an opportunity to tell people how investing in new assets can be something which can be very common.
Thanks a ton, Karan. That's it from India FinTech Diaries for this week. Do log on to our website, indiafintechdiaries.com, for exclusive content. Until next time, stay safe.